Thank you. Good afternoon. The panel that we have today is Digital Revolution for Social Good. I have with me quite an esteemed group of panelists who will share their thoughts on social impact, social good. But let me set the stage a little bit. This year has been quite interesting with COVID, and we've certainly seen a lot of the attention centered around, apart from the pandemic itself, around impact investing, around sustainability. There's quite a few initiatives going on. So I thought it'd be interesting for the panel to share some of their thoughts on what's the latest and the greatest in the space. And first, maybe I would like to invite my panelists to introduce themselves, a little bit about their company, and also their take on social good. Perhaps Kelvin, maybe you can start.
Sure, I'm Kelvin. I'm the co-founder of Funding Societies. In Indonesia, we're called Moderator. We basically specialize in short-term financing for SMEs, and this is typically crowdfunded from individuals and institutions as a form of alternative investments. So currently we're a 5-year-old company licensed in Singapore, Indonesia, as well as Malaysia, having given out about $1.3 billion of loans to about 56,000 SMEs, of which 25% of them are female owners, which is a segment that's very important to us. We have raised our Series C and count Sequoia and SoftBank as our backers. So I think when it comes to social impact, it is basically why we have started Funding Societies, to really fill the financing gap for SMEs. And we believe that if we can help, given SMEs' contribution to GDP as well as employment, and the fact that as financing is one of the biggest challenges for SMEs, if we can solve the biggest challenge of the biggest constituents of our creators of GDP and employment, we can really uplift Southeast Asia. Hence, we call ourselves Funding Societies. And that's why, that's how we hope to contribute to the overall social cause.
Thank you. Pamitra, would you like to go next?
Okay, thank you. Hi, I'm Pamitra, one of the co-founders of TaniHub. So what we do is we help empower farmers, basically smallholder farmers that, previously they couldn't have access to finance or to market. So what our platform does is we help connect them to buyers, and we also give them financing so that they can produce more and basically supply more and have more efficient process in their farming. So we, since 2016, we've worked with approximately 35,000 farmers all across Indonesia. We have around 350,000 B2B and B2C customers still around Indonesia. We do exports, we do food processing industries, hotel, restaurant, caterings, and also households. We've already raised our almost kind of pre-Series B, but right now we're gonna focus mostly in Indonesia, but probably next year we're gonna expand through the region. Okay.
Thank you. And Andrew?
All right, thanks, Jeff. Hi, everyone. My name is Andrew. I'm CEO of Bizzy Group. So Bizzy, we actually develop and runs offline to online supply chain platform that connects FMCG brands and their distributors directly to the retailers, predominantly the general trade retailers, which makes up 80% of the retail industry in Indonesia. So year to date, since we launched our platform in May 2019, we serve over 130,000 retailers across Indonesia. And we work with the leading FMCG brands, both local and also as well as multinational FMCG brands, to connect them directly. Disintermediating, there are currently 5 layers of intermediaries that exist between the brands and consumer as the goods are being distributed out. So then I think beyond that, we also provide a digital tool for the retailers as well as the distributors, so they can run their operation more efficiently, as well as giving them access to financing to support their business growth. That's a little bit about Bizzy. Thank you.
Thank you. So I'm vice chair at Vickers Venture Partners. We are a global deep tech fund, and we, one of our investment thesis I like to describe as investing in revolutionary technologies that solve big problems. core to the big problem is known markets. So in a way, we're not taking too much market risk, but also attached to a big problem is we are solving one of humanity's problems and therefore creating quite a bit of impact. One of my observations is that increasingly investors are becoming more and more astute and more forward-thinking to say that they want their money to work not just for making profit, which is important, but also for a social cause. And I think as the millennials come of age, the second generation family office folks that we talk to are a little like that. So for the next question, perhaps maybe I'd like for you to share a little bit about your experience with investors. And I do know, Pamitra and Kelvin, that investors to you may mean different things because you have customers that are investors and you have your own investors as well. But feel free to share your thoughts on whichever category that the investors fit. How are they looking at impact? Maybe we can start with Andrew this time around.
Okay. Well, look, I think for us at Bizzy, right, we're actually happen to be in a space whereby it's been garnering a lot of spotlight and interest because we actually operate in the B2B supply chain sector, which obviously currently in the past 6 to 8 months has been getting a lot of investment in the sector, given that it's relatively young and with a few players in it, right? So then a couple things why we believe this sector has like a strong fundamental going forward and why the current spotlight is actually warranted. So first and foremost, if you looked at the sector, retail is an industry. It contributes roughly to 12% of Indonesia GDP. So that translates roughly about 120 billion annual throughput, right? Now, if you dissect this 120 billion annual throughput of goods coming from the factory to reach the retailers, 80% of that actually being driven from the general traditional trade, i.e. these are the mom and pop stores occupying roadside, alleyways, or even more clustered settings such as a traditional wet market, right? Now, size-wise, they vary 2x2, 4x4, can be as big as 10 meter by 10 meter. Now, these retailers in particular, obviously facing a lot of challenges in sourcing their inventory. And a lot of the times, they source the inventory not necessarily from the most upstream source of supply, and that dictates the ability for them to command profitability, but also the price competitiveness of their product when they sell to consumer. So one is a large addressable market, and second is actually a real problem that needs to be solved in the sector. So so for investors, those are the two main drivers, but also the third is actually the impact that we can get to these retailers who need the most help, right?
Pamitra?
Yes. Same with Andrew. Actually, I totally agree. So for us, the investors that we talk to, it's a mix of like traditional financial investors, as well as impact investors, and we've seen like quite a number of large impact investors starting to contact us. So it seems like they're all like every traditional kind of investor always has like an impact arm right now, and it seems like they've been gaining a lot of interest in a lot of startups that are more into the social impact area. As for TaniHub, our sector is basically like the second largest sector by GDP contribution wise in Indonesia. It contributes to around 14% of Indonesia's GDP, and it also employs the most people in Indonesia. So there are approximately 33 million people working in agriculture, where the farmers themselves, there are approximately 25 million, and like this is a sector that never dies basically, because everyone has to eat. And also, these farmers are always, especially farmers in Indonesia, 93% are smallholder farmers, and they're actually at the very base of the pyramid. So everyone's like excited to see like, oh, what if like there was something revolutionary happening, even though it's not something super deep tech or super sophisticated, but just something to, like, for example, just as easy as helping them get access to market, or helping them get finance since they don't have collateral, and then their scheme of financing is quite unique. And what if we can uplift this 25 million lives, and like you know, help them basically improve the economy of the you know, outside of the cities. And this is something that's why a lot of investors are actually really interested in the agriculture sector for us. Yeah.
Thank you. And Kelvin?
Actually, I have a more nuanced view in terms of overall trends of how investors are responding towards social impact startups or even topics. I think first and foremost, this is I've attended many panels, and this is the first panel whereby I hear the word impact and social and uplift and whatnot so very frequently within the first 15 minutes of whole conversation. So really appreciate that. And at the same time, I noticed that there's actually a high level of interest for social impact or social impact or socially responsible companies, but the expectations of returns does not change even with that. So for example, we will look at, hey, agriculture financing, how can we help some farmers replant? And of course, if you're talking about palm oil, usually the turnaround, the whole cycle is extremely long and whatnot, and therefore almost always requires social impact funds contribution. But at the same time, what we realize is that yes, there's a lot of interest in people wanting to support the social good, but because there's so much capital shortage in Southeast Asia, the expected yields are generally higher, or even the perceived risk of the region is higher. Therefore, the expected yield has goes up. Therefore, so even with a lot more demand chasing a few socially responsible firms, the expected returns actually do not change as much, and still remains high even compared to a non-social social impact funds. So I think to that extent, we find that the whole trend seems to be still at a very early stage, and we hope and the hope is that over time that could be moderated such that as the returns reduces or expected returns reduces, it can also help us to actually do more for SMEs or from a social impact perspective.
Thank you. Kelvin, as a follow-up point to that, you say that yes, there is interest to capital going towards social good and towards impact, but yet at the same time, there's also the high expectations for returns. In your experience, do you see that as conflicting? Can money be put to good use and deliver social good as well? Obviously, I'd like to think that your respective companies fit directly in that category.
I think in my view, if you just draw a Venn diagram, I do think that there's an overlap segment whereby returns and social impact happen together, and I think that quite a few firms would be able to achieve that. But at the same time, I also reckon that there is a bigger group of segments whereby returns and social impact may be slightly less uncorrelated, and consequently, a larger part of startups that falls under that category, we will get actually less attention. So not that the attention is not helpful for a region whereby it has relatively which is relatively short in capital. Any form of capital and extra attention is always helpful. But I do think that if we want to make this go mainstream, at some point there will be a trade-off and in terms of social impact as well as results.
Andrew, Pamitra, maybe, let me ask you about your businesses. Given that there is a growing segment of people who want to do social good, yet at the same time achieve high returns, has that impacted you as to thinking about how you should build your business into higher social benefit, yet at the same time, is there a trade-off from an operational viewpoint that yes, I can get more impact, but it's going to cost me more and it's going to lower profits? How do you guys think about that?
Okay. Me first?
Andrew? Okay, Pamitra, go ahead.
Okay. Yeah. So Yeah, for us, it's actually the opposite. So actually, for us, the more social impact we bring, the more profitability we get. For example, this is in agriculture. Okay, so when farmers have certainty of market, they tend to produce more. You know why? Because why are smallholder farmers like smallholder farmers? Why do they have less than 0.5 hectares? It's because they actually have 1 hectare or even more, but because they can't find the market and they produce perishable goods, which if they don't sell it in time, it just goes to waste. So that's why they only produce, they only utilize half or even less of their land. And that's why they are smallholder farmers. And another thing is also these smallholder farmers, since they don't have access to capital, they only buy whatever seeds are cheap for them. So when you basically buy cheaper seeds, you produce lower quality goods, like lower quality fruits. For example, the tomatoes, instead, if you buy proper seeds, you can get 80% grade A, and grade A can be sold at a higher price compared to like the grade B and grade C. But because they just get whatever seed is available and it's cheap and whatever money they have, they produce grade C and grade D, which has a low value, and they can only sell it to the traditional market. But if they, since we help them get funding to buy proper seeds and other inputs, and we also help them on access to market, so they actually can sell their goods at a higher price because they produce grade A. It could be exported, it could be sold to high-end restaurants that pay higher margin, and it gives them income uplift. And because of that, they produce more. And we can tell them, hey, if you produce more sustainably, don't use pesticides, and produce organically, you can actually enter the export market, which has an even higher margin for you. And then this is actually good for them. That's why social impact actually brings more profitability. And for us, the more volume in tons and the more value that goes through our platform, we take a bigger cut. So we become bigger. So that's the thing.
Andrew?
Okay, so I think from Bizzy context, in terms of whether we want to tailor or change the way we operate in order to deliver a bigger social impact, the answer is no. Why is that? Even the way as it stands today, right? So we deliver social impact in one of the conduit is indirectly, because then we connect existing retailers, the mom and pop retailers, directly to the most upstream source of supply. And that brings a couple things. That brings a very competitive priced inventory for them to be able to sell to the consumer. So then if they can source lower inventory goods, meaning that they can command bigger profit when they sell. Also, still in the same of the existing retailers, we also give them means to increase their revenue beyond just selling physical products. Now they can start sourcing digital goods, which then they can sell also to their consumer. So that's one. That is the indirect impact in terms of the social perspective. But number two, actually, our app that sits on the retail end, which we call Toko Smart, essentially mobile app. Anyone can download, sign up as a business or even as a store, and they can start sourcing the goods. Now, the direct impact that we have is obviously, as we know, the impact of COVID in our workforce, right? There are a lot of increasing number of displaced workers out there, and unfortunately, some of them won't see their job to even return anytime soon. Now, through our app, essentially, we give them opportunity to become entrepreneur by setting up shop. They can sell to their neighborhood or even the local community, and in return, they obviously make gains. And that's a temporary revenue for them, or means for them to make ends meet.
Sure, thank you. Switching gears a little bit, I think the topic of this panel is digital revolution for social good. Let's talk a little bit about sort of the how the digital revolution has helped your business, how integral it is a part. Andrew, you speak a little bit about your app and all that. Besides the app, is there anything else? How do you see this technology angle playing out in the future?
Okay, so look, So we're in a B2B e-commerce segment, right? Now, obviously, it's a very nascent industry for Indonesia, but then it's inevitable for it to grow or even develop, right? So let's for example, take in a more developed market out there, the likes of China and India. B2B e-commerce as a share of activity as a total e-commerce in the country commands 70 to 90% of total e-commerce activity. Indonesia, that figure is barely 40%. So we have a whole lot of room to grow and catch up. More so, let's take a look at the B2B e-commerce penetration or contribution to the GDP. If you looked at the developed market, again, China and India, that figure stands at 20 to 24% B2B e-commerce contribution to the whole GDP. Indonesia, that figure is only 1%. So then, again, we're at the very beginning, and obviously the market is big. The underlying problem is real. So in terms of the digital adoption, fortunately, because we're an FMCG supply chain, given the staple nature, COVID actually brings forward that growth and inevitability. Because of COVID, a lot of supply chain activity, especially those who's actually predominantly offline, are actually getting impacted, getting disrupted. Because now a lot of stores, especially back in March and April, they showed less tendency to be able to interact with people, especially salesmen, for them to source their goods. Now with this technology platform, they can still procure inventory without having to obviously minimize contact with other human beings, and that's where we able to minimize the impact and the disruption in the supply chain. We're able to stay relevant, and that's fortunate enough that COVID actually brings forward and accelerates that adoption.
Hi everyone.
Sure.
Sorry, I think we are on a tight schedule. We may have to wrap up this session right now.
Okay. Maybe just the last comments with Kelvin and Pamitra on this topic.
Yeah.
Maybe a quick one. I think when it comes to digital revolution, how does it help SME financing? It's really in two ways. I think number one is that by virtue of credit and data, it allows us to actually serve SMEs that previously would probably be underserved, either as a form of new to SMEs that are new to loans, or as a form of top up to bank loans, depending on whether it's an emerging market or developed market. And I think we really serve as a complement to us banks and to drive financial inclusion for these SMEs using data. I think that's number one. Number two is also that we're able to customize products based on the need and the risk profile of the particular SME, which again helps to address the need, the reach out to more SMEs. And I think to us, to the extent that we can uplift SMEs in Southeast Asia, we think that we can actually help to uplift the region as well. Let me just pass on to Pamitra.
Okay, for us, it's very simple. For us, previously, farmers don't know like what's in demand, so they just copy their neighbor, what their neighbor is planting. But right now, what we're doing is we feed them like what is the demand, the current demand in the market this week, next month, next 2 months, next 3 months, so they can actually plant accordingly. So this helps reduce waste, gives them better pricing, and for us, basically, it just helps us make the transactions and delivery like more efficient. That's it. Just demand and supply forecasting is actually our top tech part in TaniHub.
Thank you, gentlemen, for your insights, and I wish you all the best as you continue doing social good for everyone.